right there, everybody. Thanks a lot for joining me on this Tuesday afternoon market recap. This is the chart of the NASDAQ on my screen. You can see today that we tried to at least pull on back down and to fill this open window, very similar to what we established on the S&P 500 during the midst of the abbreviated week's worth of trade last week. We haven't entirely closed this window. Technically speaking, there is still a portion of the gap that is open. However, similarly to what we were speaking about yesterday, it is showing up in the form of a hammer candlestick. It is also, if you wanted to take it one step further, when we actually really talk about and reference chart patterns, it seems to me that this is a pullback in a controlled manner, and it is setting up the structure, so to speak, that it may be right in the midst, or right now anyway, we might be in the midst of that of a bull flag. So pay attention to that. I'm not going to really harp on in the market analysis, or at least continue this discussion anyway into the Dow Jones and also the S&P 500. I think very much so that everyone who listens, to this public forum here understands what to look for. I've tried my best to make it as sort of straightforward and clear as possible. And as such, the markets are really just moving quite nicely into synchronicity as to what and how we would expect these markets to operate. Pay attention. We probably will see, all right, if it's not this week, it should be next week, a really rather strong rally to the upside. And this is a pretty decent segue into two markets that we haven't really been talking about all that much, as they have sort of moved into that August lull. Here we are in the month of September, obviously, and this is the chart of the Russell 2000. Essentially what we're looking at here is the breadth of the market, obviously. 2,000 companies through market cap, which are a lot, or at least significantly smaller than what is encompassed and housed within the S&P, the Dow, and also the NASDAQ. But as you can see over the past week and a half, we have seen a very strong rally. This rally is taking place off from this magneted color sort of line in the sand that we have been paying very close reference to and attention to as we continue to drill on back down into it. And I'm just posing the question to you right now that we're starting to see anyway, either a short squeeze or a definitive rally shaping up off from this support area. To me, it looks like, again, it's moving in synchronicity with a lot of individual trades that I am going to recap as at the close on Tuesday, but this is certainly showing a little bit more of a vital sign as to what it was showing during the month of August. Yes, it is lagging a little bit, but today we were up a further 18 points. We're starting to see a consecutive series of long day white Morobozu candlesticks. And really right now on the Russell 2000, you should be paying attention to roughly this 1590 to 1600 area, which is also working quite nicely with some traditional sort of resistance taking place up here. Essentially, we've been in a channel much like the other broader equity markets, but it has been a little bit different, or at least the actual pullback that we have seen really since the beginning of Q4, if not into the beginning of Q3. It still hasn't actually achieved a series of higher highs yet on the Russell. And I'm posing the question right now, is this the move right here, whereby we're not only going to see these markets push to new all-time highs with the S&P, the Dow, and the NASDAQ, but is this going to be that of a legitimate rally above these resistance areas? Because if it is, you'll start to hear people talking about the positive movements in breadth, which, again, it has been on the wayside really since, again, that sort of mid to late section of 2018. But whenever you see a support area, or at least a very important support area, that's why, again, this line here on my screen is a different color to the traditional blue color that I have for general support and resistance. It makes me ask the question, well, again, is this just more evidence that the markets themselves are on the precipice of a major breakout? Again, taking into consideration as to how we're sort of looking through the technical lens, the application of the technical analysis to the Dow Jones, the S&P, and the NASDAQ, everything seems to be aligning quite nicely. Now, if I take this one step further, have a look at the Dow Jones Transportational Average. Again, a very abrupt rally off from the support area down here at 9,750. It hasn't been that of sort of that magneted color. It is more so just a traditional blue colored line on my screen at the moment. But again, this is a very strong sort of double weekly gain that we're seeing. We're trading up here at 10,672. We're back up into the resistance area prior to, of course, the reversal or the little correction that we have been in really for the entirety and the majority of August. And again, very similarly to that of the Russell, if we start breaking above these resistance areas, and also we see a legitimate bid pretty much at the gap support, which is essentially taking place in the Dow, the S&P, and the NASDAQ, we could see these markets collectively really take off to the upside. And again, this is looking like, to me anyway, a short squeeze of some sorts. A lot of people, a lot of bears have been positioning themselves net short during the month of August. And really what we were speaking about, right, not only just yesterday, but also for a number of weeks, is that all of these shorts right now are still underwater, and it continues to push further against them. So they're in sort of a conundrum right now, whereby they're sort of probably internally asking themselves the question, do I buy to close out of these original shorts, or do I sell, of course, some of those put options that they may have been actually buying? And as such, it's just adding fuel to the fire as these markets continue to take off to the upside. I understand there's a little bit of a dichotomy, so to speak, between that of the small caps, or at least the transportational average, and that of the industrial average at the moment. And of course, that of the Russell compared to, again, the industrial average and the NASDAQ and the S&P 500. But a lot of people have been, again, incorrectly calling market weakness. I mean, it's just to some extent anyway. They are correct in the market weakness, so to speak, in the breadth of these other ancillary markets. However, they still haven't actually committed any major technical damage. And as such, you can see that we are rallying very aggressively off from this support area. So pay attention, be patient. These markets continue to grind, all right? They're continuing to move higher. This is a major clue here on the NASDAQ of all markets that it's trying its best to close the gap. We still have this lower wick over here. And as such, again, you can see the foundation. Hopefully you can see the bullish argument, which continues to build in the face, of course, people who are still a little bit skeptical on this market actually breaking out and even moving to higher prices. This is going to turn very abruptly. I believe it's already in the process of doing so, and it's really just a countdown. In the past videos, I've said, look, bears have limited time to actually close out of those positions. This is prior, of course, to the bullish move that we have seen over the past week or so. And again, it's only going to add pressure to those original positions for those who are holding net short. Okay, so just think about that. These markets are looking good. Hopefully, we're going to see a reaction out of, we've already seen, technically speaking, a reaction during today's session. However, I believe this is going to continue to build, and inevitably, all right, we're going to see a legitimate push above what has been a little bit of a short-term resistance. That is building technically at this traditional area of resistance. Now, a couple of stocks I just wanted to recap on. It's really a continuation off from the analysis and also the trade recap that I left you with, as at the close yesterday. Caterpillar continues to rocket, up another $1.15. This is after the 120.39 entry, and there was a smaller position at 124.82. Part of me still believes, unfortunately, that Caterpillar is going to at least pull on back and close this open window. So if you're in this trade right now, I would encourage you, depending on how many positions you have as a percentage of your entire portfolio and also as an individual trade itself, to consider, all right, taking some of those positions, all right, closing them out, putting the money in your back pocket, and just holding through the period of whether it moves up to 135 in this advance, or if we do see the pullback, if you've banked some of the profit up and around this 128 handle, you could re-enter back down at 119.24. It seems like a bit of a stretch at the moment. This stock continues to rocket, but above all else right now, it's a very, very good position to be in. Whether, when you're sitting down, you're saying to yourself, do I close out a position of these profitable trades, or simply do I hold on and, expect the trend to continue, right? I would encourage you, of course I'm not you, but it makes a lot of sense to me to actually close some of those positions. And just be mindful again that we could enter into a pullback, much like the markets, to again definitively close their windows. Let's have a look at COP, up another $1.66 today. Another long day white Morobozu candlestick. Surprise, surprise, we have another gap out of what appears to be a legitimate reversal. We've been waiting for this move for a number of weeks. It has been, again, a rather quiet period in the month of August. We haven't actually shorted really any of these stocks. We don't trade, generally speaking, counter trend unless we are calling for a major intermediate market correction. That hasn't been the case during the month of August. And as such, you can see some of these entries to the upside. This entry here at 52.12, I will say that is not technically, so to speak, an entry. That is an opportunity to re-enter into original positions, okay? If in fact COP does pull on back down. So very similarly to what I just spoke about in Caterpillar, whereby the market is gifting you, or at least these two individual stocks are gifting you the opportunity, right, to close out of the position or a portion of it, to sort of sit on your hands a little bit and look to re-enter at a better price if we do see these markets pull on back down and close their open windows, right? We've closed this gap over here. You can see over here at 56.60. We closed at 56.63. This gap between the 2nd and also, the 5th of August, this has been definitively closed. But as such, we are continuing to establish bullish gaps. When I bring up the oscillators, have a look. They are very much so positive, very much so bullish. We are short-term overbought on the RSI. And when I flick on back on over into Caterpillar, you can see the same thing over here. The RSI is getting up above that overbought setting. You're getting a print here of 73.47. And again, it makes sense that we are, right, potentially set for that of a pullback. Now, the final stock, of the bullish stocks anyway, is that of IBM. IBM up another $1.66 today. Again, if you're using call options, if you're using derivatives options, this is incredibly profitable. 3 of these stocks are profitable, whereby the other stocks that were in, right? It's a little bit of a mixed basket, if I may say so. But, and what you should understand is it's not unexpected. We've been speaking about these major companies, or generally, historically anyway, the market leaders filling some of their open windows. That has somewhat to an extent taken place today. So again, we're starting to see a little bit of, again, a dichotomy in some of these stocks, but they are moving to either close their windows, or we're starting to see these stocks rally out of an incredible area of support that we've been picking up on for a number of weeks. Okay, so 137.01. You've got a potential re-entry at 136.78, and we do have a little bit of an upper wick, but again, that is around this open window over here, which has been closed between the 2nd and also the 5th trading session in the month of August. Okay, so again, those three stocks are working quite nicely, right, when it comes to our top 12 individual share list. I just wanted to say again, pay attention to the Russell, pay attention to the Dow Jones Transportational Average. To me, this looks like a legitimate bottom, and what is exciting is that as much as sort of the bearish or the pessimistic sentiment again lingers on these smaller markets, all right, or what some people deem to be somewhat less important, these are very healthy signs that they are starting to pick up. Yes, they are lagging, but they're really starting to support the closely followed markets. And again, just to show you this, we've been speaking about this not only for this week, but also last week and really the entirety of August, whereby this is still another opportunity, right, to take advantage of that next potential upswing, whereby we're going to see these markets break above their all-time highs and continue to trend to much higher prices. So all of this is coming together quite nicely. The pieces of the puzzle are falling into place, and it's only a matter of time now, depending on how deep this correction is, to close these open windows, right? We're already starting to see the price action trickle through into individual companies as well. And I just wanted to leave you with that analysis as at the close on Tuesday. All right. So on that note, everyone, I'm going to say farewell. Have an enjoyable Tuesday evening. Thanks a lot for watching this public analysis sort of, class and videos that I present you with during the week. It's my pleasure. And look, I'll see you later in the week for another market address. All right. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.